Is it realistic to actually expect China to do what the US is asking for there in terms of disclosing the intervention in currency markets? I'm talking really about the enforcement mechanism.
Well, yes, it's interesting that they've got this far in terms of, because one of the key problems has always been how do they enforce this, how do they actually follow up on a lot of the things that could be agreed in a big deal with Trump and Xi. And actually disclosing the intervention, I mean, that's not too much of an ask, and you can already sort of second guess a lot of the intervention anyway. So if that's part of the trade deal, then that could solve a lot of the problems on the currency. But there's still question marks over a lot of the other elements of the deal in terms of the subsidies and the actual sort of interventions in IP protection and the technology side.
Yeah. Have the markets gotten ahead of themselves in terms of optimism here over what we ultimately get from the trade deal, John?
They've become more optimistic, but then there was that sort of big increase in pessimism late last year, which turned up in a number of different assets as well. And I think, you know, listening to the mood music coming out of Beijing and Washington, I think you can see why people are a bit more hopeful that this is leading to a benign resolution, and it sort of needs to, because in the meantime, of course, the tariffs that are in place have hit exports from the US into China, and that's one of the reasons why growth slowed in the fourth quarter of last year. So there's a headwind going on at the moment because these trade talks haven't been resolved. Obviously, if they are in a beneficial way, that will sort of turn into a tailwind, and that's what people are starting to hope for, I think.
Yeah, and turning to the economy as well, it's a crucial 11 days that begin next week, Miranda, with the working report setting out the goals for 2019. Some expect China to revise down its growth target to something like 6%. If that were to happen, how much of a concern is that really for markets in terms as well of the context that we've really seen Chinese markets outperform so far this year, looking at equities?
Yeah, well, I think if the growth targets, I mean, that's so well baked into expectation that I think everyone expects that sort of 6 to 6.5, and revising down expectations, and particularly H1 going to be weaker, potentially recover in H2. So that's sort of where basically market consensus and what we expect out of the two conferences next week. But the big question marks is then what more do they do? And one of the big things is tax cuts, because we've had the consumer tax cuts, and that's helping the consumer side in terms of sort of purchasing on the consumer staples side, but it's going to be the corporate tax cuts which are potentially, you know, increase profitability, increase investment, and that's one of the big debates of next week.
OK, and what does that mean then for the equity market? Because we've seen the CSI 300, Shanghai Composite go into a bull market. Of course, that's relative to underperformance last year. Does that bull market have further to run? And if it doesn't, what do you see potentially ending it abruptly?
Well, the thing is, I mean, we think the market at the moment is not necessarily based on fundamentals,
right.
improving equity fundamentals, but it's really a combination. You have liquidity that's come in. You know, you saw the strong social financing numbers. You've had monetary easing, so liquidity helps markets. Deregulation. Yi Huimin, the new CSRG chairman, he's deregulating sort of some of the previously very strict regulation we saw after 2016, and then you've got top-level government support, and that's a key. I mean, that's such an important, you know, the fact that President Xi is wanting capital markets, not debt, to really revise the economy. You want equity investment in the small caps and in the technology sectors. And so you've got that top-level support, and the combination of those three is a really powerful signal, particularly for the retail investors. So they're piling into the markets. You've got MSCI inclusion, which means that you've got the foreigners potentially buying in. Then the domestic investors think, oh, well, if the foreigners are buying in, then I can buy in. And it's almost sort of like a snowball effect, and you're getting... and so this is why you're seeing sort of a very strong increases. But then, of course, the risk is they have to tone it down slightly, and that's where you could see a bit of a correction.